Welcome, everyone. Good to have you. We're going to have some fun today. I guarantee it. Just so you know, this meeting is going to be recorded and posted later to the OATS website and the YouTube channel for the benefit of people who couldn't attend live. And that goes the same for all of the calls from this whole season are on YouTube. So if you ever can't make one or had to leave early, you can find them there. Welcome to the Organic Advisor Call Series. I'm your host, Sam Oschwald Tilton, and I'm the training specialist with OATS. OATS is the Organic Agronomy Training Service, but you got to be careful when you Google us, otherwise you'll get a bunch of OATS. OATS is governed by a consortium of universities, agronomists, crop consultants, nonprofit educators, and industry representatives from throughout the country, and it's fiscally sponsored by the Organic Trade Association. These partnerships are at the core of the OATS mission. OATS provides science-based training for agriculture advisors. We're a collaboratively managed training program for ag advisors, and we work with organic farmers, transitioning farmers, and organic curious farmers. And we help to grow the domestic organic supply by strengthening the educational support network for agronomists, certified crop advisors, extension agents, and technical service providers. Our aim is for every transitional and certified organic farmer to have robust access to technical service expertise that provides unbiased and science-based agronomic support for their farming operation. This is our fourth episode for this season, but there's a whole past season from last year of the series available on YouTube, and we'll put the link to our YouTube channel in the chat. And like I say, on that YouTube channel, you can find all the episodes from last year as well as the ones from this year. OATS runs in-person training events, virtual courses, and publishes all manner of resources throughout the year. In fact, we're releasing a series of fact sheets and videos right now focused on organic grain issues. And you can find all those in our newly launched resources library. And I'll put the link for the chat, a link for that in the chat now, which is on the OATS website. Feel free to poke around. If you haven't done so already, I highly recommend signing up for the OATS newsletter mailing list just to keep up to date on these resources, to see if we have an in-person training coming near you or a virtual training that might interest you. And we'll also put the link for that in the chat now. Okay, that's it for housekeeping. We did everything official, and now we can get down to business or agribusiness, and we can get started with today's discussion. We're very fortunate today to have our guests, Lynn Brakke and Scott Sinner. I'm going to start the conversation off by introducing Lynn and Scott, and then we'll begin our conversation. I assume you're tuning in today because you want to learn something. And so as we're talking, I hope that you'll share any questions that you have in the chat. Because after a half hour or so of conversation with Lynn and Scott, we'll pose your questions to them. So as we go, please, anything that you want to learn more about, whether it's a question, comment, etc., put that question in the chat, and we'll bring that up after talking with them for a little bit. Okay, here we go. Lynn Brakke lives near Moorhead, Minnesota. He farms between 2,000 and 2,400 organic acres of flat, heavy clay. Food-grade soybeans are his main crop, along with corn and alfalfa. And in the past, he's grown potatoes and sugar beets for feed. He started farming in 1980 and transitioned to organic in 1993. When he started organic, there was no domestic market for him, but there was an international market. And so he would travel internationally and find clients, mostly to Japan for soybeans. Later, the domestic market developed through the work of people like Scott Sinner, who he contracts with. Okay, that's Lynn. And we've also got Scott Sinner. Scott's worked in grain buying with upper Midwest farmers for 21 years. In that time, he's seen lots of ebbs and flows in the market. It's nice to have that kind of perspective. His company, SB&B, buys organic soy and sells most of it to Japan. SB&B has been a certified organic handler since 1998, and Scott is also on the board of directors of the U.S. Soybean Export Council. And they have staff in the U.S. and throughout the world to promote soy and sell it domestically and internationally. Okay, so you can see why at least I'm excited to have these two experienced people with us. Now I'm going to pose some questions to each of you, Lynn and Scott, but feel free to add on to the other's thought or chime in. We can have a more informal discussion here. Okay, so to kind of kick us off or orient us, the question is, given lower organic commodity prices that we're seeing now, how can farmers be economically sustainable with prices as they are now? In times of lower grain prices, farmers often adapt by considering changes to agronomy, marketing, and financing. And so that's kind of our general subject for today. I wanted to start off with a question for Lynn. Lynn, when you and I were talking earlier, you talked about the importance of mindset and expectations. And I'm curious to ask you, what is a good organic mindset, and how can that mindset help in periods of low prices?
Well, for organic, it seems to me that it's very much a long-term, probably lifelong approach. And if you have the mindset that once you get in some tough times, market-wise, which we are in now and have been in the past, and then you kind of jump ship, go back to conventional, um, chances are you're not going to come back again. I've seen it happen many times when people leave organic, they don't tend to come back again. It's a commitment that you make when you once decide to do it, and I certainly wouldn't recommend that you're in and you're out.
Yeah. Okay. So it sounds like you're saying even though the low prices now might scare a lot of people out, in terms of the big picture, it's worth trying to figure out how to stay in when those prices rebound back up.
That's right.
Okay. Um, Scott, I was curious to have your perspective on something that seems related, which is understanding the cost of production, because it's not every year that a farmer might be profitable, but you were saying it's very important that a farmer understand their cost of production and also kind of look at the entire cost of production. Can you say more about what you mean by that?
Yeah, for sure. Thanks for the opportunity to be here, Sam. I really appreciate the invite. And good afternoon to everybody here. You know, we farm too just outside of Fargo, and we farm conventionally, not organically, but we farm, and it's so important in times like now, to understand what your true cost of production is, and I'm talking about your carry cost and your interest costs and your transportation costs to get it to market, because as margins shrink, you need to understand what a profit is and what a good offer is. I've seen it time and time again that I mean, we farm and we sometimes have feel the same way, but guys fall in love with their crop and they sometimes have a hard time letting it go. And it's when you get a good offer, a profit's always a profit no matter which way you slice it. So you just need to understand where that profitability lies, and what potentially you need to do to try and make sure that you're getting a profit.
Okay. Um, and so there's times when we might have to sell, below our cost of production. And, Lynn, you were saying it's nice to have a good relationship with your banker during those years where we might have to sell, at below cost of production. And so in those times, it sounds like a lender's can be very important. And I'm curious, Lynn, from your experience, what do you feel like bankers sometimes don't understand about organic, or how's your organic farming model different from the conventional farm model that they're used to? And another way of saying is like, what kind of mindset would we want an organic banker to have?
Well, I've seen there are certain banks or chains of banks that have certain mindsets. So it's not just individual banks, but it can be the chain as well. And some of them, they just don't have any time for anything other than conventional. They will have a mindset that there's one way to do this, and that's the only one they understand, and they don't want to understand anything else. Then you'll run into some banks where, and especially individual bankers who can think out of the box, and they're really just looking at the bottom line. If it's a good investment for them, a good risk for them, it's good business. And so it's pretty important that you're linked up with the right banker. Otherwise, you are really going to struggle when you have to try to explain the value of what you're doing every time you want to do something. It's going to get tiresome.
Yeah.
And Sam, if I could
Please.
jump in real quick. I mean, Lynn is exactly right. I can't tell you the number of lenders that had conversations with to educate them on what our contracts look like and how our contracts function. And generally speaking, once we have those conversations, the lenders are like, "Oh, okay, I get it. Like this works," from a profitability standpoint. And so, it just takes time on the education piece, but it's very important because it's a different way of looking at things. And sometimes when a lot of your operating loans need to be paid back by April 1st or whatever before your next crop's coming, well, with a lot of our industry, it's a buyer's call type contract. And so our customers are telling us when they want to ship it. And so we're not bringing stuff in to clean it. Well, you have to deliver to get paid. And so as long as the farmer and the lender understand the mechanisms and what the potential is, I have yet to see it where the lender doesn't approve of it, because it's a good deal for the bottom line.
It sounds like yeah, go on, Lynn.
Well, another thing too is I see often lenders are they have a very short window of time that their perspective is. And organic farming, we do a lot of things that are multi-year systems. And so it's hard for them to get their head around not seeing a return in 8 months or 12 months, or things are a lot more predictable or quantifiable maybe in conventional. And with organic, things get a little more complicated and need a little bigger time frame to realize some of the gains.
Mm-hmm. Lynn, if we can kind of get right to it, I feel like a lot of people want a silver bullet of, hey, when prices are low, what costs can I cut on my farm? And I hope people didn't tune in today imagining we were going to give them that silver bullet, or maybe you can come up with something real quick, Lynn. But my question is, do you find that there's a lot of ways to cut costs on the farm when prices are low, or not really? You would have done it already if there was.
Well, that's just it. If there was a place to cut, it would have happened a long time ago. Usually, if you're going to cut costs, you're going to end up cutting your returns too. Fertilizers or what have you, equipment. Those are all pretty well set costs, and I don't see. And someone says, "Well, how do you cut when times are like they are?" Good question. I wouldn't cut anything. I wouldn't change anything unless there's something you should have cut a long time ago.
Right. So on the one hand, okay, you're saying it's difficult to find stuff to cut, but another place for kind of growth or profit is spending money on things that make you more profit. Are there examples of things you paid for, or we're talking about bankers taking out loans for, that have increased your income?
Yeah, and I think that's the piece that's missing so often. We talk about where to cut, but maybe it's when times are good, where should you be investing? Do you need tile drainage? Do you need irrigation? Do you need to upgrade your trucks, your combine? Go to one big one instead of two small ones, so you're more efficient with labor. So when times are tougher, you're just more sustainable.
Uh-huh. Can you say a little bit more, kind of in your experience? Sounds like you're saying when times are tough, there's only so much you can do, but when times are good, you can spend money to be more resilient for those future tough times. Can you give some more details or examples? I think you had just mentioned tiling or irrigation, but what are things you've invested in that you feel like have kind of clearly paid off or helped in those tougher times?
Off the top of my head, I'm having a hard time coming up with real good specifics, but certainly that's when you're going to upgrade to more efficient equipment of all types, maybe making changes in personnel, just having the long view and how am I going to be more sustainable long term.
And storage is a big piece of it.
Yeah.
Making sure that you have good storage, because you understand that you're going to need to store crop. But Lynn's right. I mean, looking at, it's hard to start. I mean, our first inclination is to try to cut costs to help things meet, and and Lynn hit the nail on the head. If you cut costs, you're going to cut return. And that's not what we're going for here. And we want to try to produce more to get more return if we can. And so trying to figure out ways to maximize your return, and in good times becoming more efficient and more resilient is a great way of looking at it.
I probably shouldn't tend to pick on bankers like I seem to be right now, because I have a great relationship with my lenders, but it does seem like their focus is where can you cut costs. And so often I think there's so much more potential in where can I actually invest, spend more wisely to change the other side of the ledger and increase revenues.
Speaking of investment, when I visit organic farms, it seems like organic farmers tend to have more machinery than their conventional neighbors. Why is that? Why is that?
That's a great point. Organic farming is less forgiving than conventional. You have your weather windows to work in, especially in June. And we talk about the June monsoons. Well, that's a reality some years, and you get very few days to work. And you really don't have as much of a rescue treatment when things aren't done on time. So my philosophy has been, I kind of learned this early on, that you need to be over machined and overmanned to be successful. Because on that day when everything has to happen in 1 or 2 days, you can get it done. If it seems like too much equipment when you come out of a conventional world, but it's not, because you just have a lot to do in a very little time.
And it seems like maybe that's another piece of educating the banker of, hey, on a conventional farm, this seems off, but on my organic farm, this is more normal.
Yeah, especially in the upper Midwest where we are. I mean, our growing season is so variable that you can get, you might have to cover all of your ground in a matter of 2 days if you can. And
exactly.
Lynn's right. I mean, timing is everything when it comes to not only organic farming, non-GMO farming. I mean, all farming, quite frankly. But yes, I mean, on the organic farming side, your windows are much tighter, and you have to be able to get across your ground.
If you miss a weed control window with organic, you just missed the weed control window. That's it. With conventional, you may have to change the herbicide you're using because it's at a different growth stage. Yeah. So you just don't have recourse with organic. And so often in weed control, as an example, we need to do it so many times. We're going through, maybe in soybeans, we're going through with a tine weeder once a week. And then there's the occasional rotary hoeing. And then the row cultivating's got to happen. We're in these fields sometimes 3 times a week, the same field. So there's a lot going on. And you got to have a lot of equipment. You got to have a lot of labor to get it done.
Uh-huh.
And that equipment's got to be ready to go in the spring, too. You can't be fixing. You can't have breakdowns. Stuff's got to be gone through in the off season, so it's ready. Doesn't have to be new, but it's got to be in good condition.
Yeah.
Yeah, your equipment and labor costs per acre are significantly different in an organic operation than a conventional one.
Lynn, could you say a word or two? You had mentioned your irrigation. I think you were telling me that you've got movable center pivot and that you can irrigate through your tile lines. Could you say a word or two about that? That was newer for me.
Well, back up a little. Before that, it's kind of interesting. I was growing some soybeans for a grocery company, grocery wholesaler in Japan. And they came to look at their fields, and they said, well, what do you do when it doesn't rain? And I said, well, that's normally not the problem. It's too much rain is more of our problem. And they said, so what do you do when it doesn't rain? And I said, well, I guess we'd have to put irrigation in. So actually for that customer, and for myself, I started putting some irrigation in. And this is land that doesn't typically need much, if any, irrigation. So I put in center pivots that are towable, so they can be moved from field to field to field. And you just have the pipes installed in the ground. So when you move it to another field, you just hook up and turn it on. So that's one thing we do there. We've done some tile drainage, and then we also can run that same water into the tile lines and sub-irrigate. There's a place for both when it comes to irrigation. Sometimes one is better than the other. But yeah, that's a nice alternative, using the tile.
And that's one of those examples you're saying where you invested, but you feel like that's really paid off or helped you, maybe especially in a lean year where rain's an issue.
You know, with irrigation is one thing, but with the tile where we're at, you can pay for that in 1 year, pattern tiling on the right year. But it might be 10 or 15 years till you have that right year that you paid for it in 1 year. But you have the other 14 years that you have the benefit of it too. So those things can pay huge dividends, and that's that whole being sustainable, resiliency. Because this year we had just a horrible early season of just excessive rains, but every time we got into the field, it was the tiled fields we got into first, every time. And some of the fields that weren't tiled, we didn't get into them by the time it rained again, and then again, and then again. And we got one quarter section that's black today, cornfield. We had to work it up just because we just couldn't get there, and it just didn't do well. Had it been tiled, it would still be in corn right now.
It's a good point. It's like you never know what year it's going to pay for itself, but even if it's 10 years in between, you're still getting a benefit from it.
Yeah.
Scott, question for you in terms of marketing. You know, it's like prices are low. Every farmer wants to get the best contract they can. Can you talk a little bit about the marketing process for a farmer, at least as you see it as a buyer, in terms of timeline? You know, what's a good time for them to make calls so it's not you know, at the last minute? What are things to look for in a forward contract? Yeah, just in terms of people trying to get the best contract they can, what are some good practices?
Yeah, certainly. You know, in terms of timeline, if you're an organic farmer and you're not forward contracting, I'll just talk about spot market type stuff first. If you're spot marketing, it is absolutely imperative that you take very good samples of your crop as you're harvesting. Take some out of every load as it goes into the bin so you get a good representation that you can show your buyer. But you know, as soon as you're done with harvest, start contacting your buyers that you want to try to do business with. You know as a farmer generally who you want to work with. But get those samples over to that buyer as soon as possible and start those conversations early. Because, you know, I'm getting today I had another phone call from a guy that's sitting on a bunch of 23 crop organic soybeans. But, you know, at this point, all the buyers they're all you know, supplied up for their 23 crop. They're just waiting for their 24 crop harvest to happen that they've already pre-ordered. And so it doesn't do a lot of good. I mean, there's some farmers that think, oh, I'll just wait until I hear about prices, and if they're higher, I'll start calling. Well, if that time is August 27th, it's not a great time to be calling to try to sell a bunch of soybeans. It's really important. It's really important for the buyers to understand what you have on hand. So if they do continue to get orders throughout the year, that they can call you and get something done on those. From a forward contracting standpoint, which I will always be a proponent of forward contracting versus spot market.
And can you say why?
Well, so there's times when spot market is really good. There's times when it is. I mean, 2 years ago is a great example of it. I mean, we were contracting at, you know, I don't remember, I think right around $32 a bushel. Prices got ridiculously wild because we cut off imports from India, and all of a sudden there was $40-50 soybeans out there, and so it was a great deal for the farmers that had beans. But everybody in the whole industry knew that those price levels weren't sustainable, and we've seen what's happened since then with pretty much 50% of that price is where we're at today. And so again, the reason I'm a proponent for forward contracting is because you know what your specifications are, you know what your expectations are, you have your price locked in, and you know the buyer that you're working with, and you trust the buyer that you're working with, and so that's where I think working together long term is going to be better for the industry, as opposed to moving around and in and out and some of that.
Mm-hmm. I'll just remind people, if you're having any questions or certain topics you want to hear more about, put that in the chat so we can get to it. Lynn, do you have anything to add about forward contracts versus spot market?
Well, I really prefer forward contracts. It's a very volatile market. Even when prices are good, it's a little tricky you can play the spot market. I know some people who typically do that, and they do all right at it, but it might keep you awake at night. Contracts are valuable.
Mm-hmm.
Because
Scott,
you might have plenty of soybeans, but you might not have the right variety.
Yeah, right. Yeah, I mean, there's specifications, and the other piece is, in today's environment, having that contract and those being sold is a heck of a lot easier conversation with your banker if they aren't
True.
sold in the bin. So those forward contracts are worth their weight in gold right now.
That's right.
And when farmers are looking around for a forward contract, is every contract pretty similar, or are there certain details you really want to look out for?
No, I've seen my fair share of forward contracts. I have not seen all of them, obviously, but the things that are important, total production is really nice. So you're not, whatever you produce, that's what the buyer is buying. Active God is obviously very important. Most contracts have them in them, but make sure that there's an active God in that contract. Make sure that the payment and the delivery function is spelled out very well. And then just take a look at the specifications, that they're not overly restrictive on. Now I'll tell you, most grain buyers like myself, I mean, we don't make any money if we reject all the beans we're supposed to buy. So trust me, we want to buy the beans and sell them just as bad as the farmer wants us to take them, right? But there's some stuff that just doesn't work for the food industry, and so understanding what that is and what your risk is as a farmer, and just make sure you have a good feel for the buyer on who you're working with.
Okay.
And from what I see, wouldn't you say, Scott, that virtually all the organic buyers do forward contracts, offer forward contracts?
Yes, yeah, just because of the volatility. Anybody that's really doing a lot of work in this space is definitely forward contracting it.
Mm-hmm.
And question from Kristen that's related to what we're talking about, so I'll just bring it up, is, are there particular ways to find an organic buyer who wants a forward contract, or is it just making some phone calls, and then when you're discussing prices for the forward contracts with the buyers as a farmer, are you just taking what they give you? Is it a negotiation? Like, what's a good way for the farmer to get the best deal out of that?
I'll let Lynn talk about this, but I'll start. Thank you for the question, Kristen. There's a multitude of ways of trying to find a buyer. You could certainly ask your certifying agency if they have any recommendations. You could go to different organic conferences and see, there's always a number of buyers at a lot of those shows. or it's talking to some of your neighbors that are farming organically in your neighborhood and seeing where they're selling some of their grain. Those are some good ways to do it. Now, in terms of pricing, yeah, I mean, if it were me, I would call, a few guys that you're comfortable with and doing business with, and just kind of get a feel for the market. For myself, I try to just be as honest as I can with guys and say, hey, this is where I think we need to be in this range, and we just kind of work off of that and get something done. So.
Yeah, I guess I would say too, when it comes to contracting, I don't find that there's a lot of negotiation there. The price is pretty well determined. They've made a deal with a buyer on the other end. They know kind of where they have to be. And if we're talking soybeans, and let's just say they're saying it's $30 and a bushel, and I'm thinking it should be 32, we can talk about it, and maybe there's a little space there. But 9 out of 10 times, it's pretty much what they offer, is my experience. I can tell you, I've been doing this a long time, and there are certain people who will chisel and chisel and chisel to try to get that extra 25 cents. And next time they'll come back and do it again, and they're relentless. The buyers don't want to work with them. So keep that in mind. There's negotiation, and then there's just being a pain in the neck.
What's the timing like? Like, Scott, if a farmer calls you, you say, hey, here's where we're at for a forward contract, and they say, okay, I'm going to check around, and they call you back 2-3 weeks later. Is that going to work, or what's the time frame like where, yeah?
Yes. So usually if we're in a forward contracting scenario where we're talking about forward contracting production, okay, for us, what we do is we have all of our orders in place, right? So if it's forward contracted, it's sold already on the other end to our buyers. And so basically we have our orders and our orders from our customers. And so once we're contracted to the volume we need to supply that customer, we're done contracting, right? And so you're at the risk of, because I mean, just because I've talked to you now and you're going to call me back 3 weeks later, well, I may have covered them in the last 3 weeks, right? And
Yeah.
so, I mean, I always have those conversations with the guys, just saying, yeah, get back to me, as soon as you think you can, but understand that we're still calling other farmers. If it's a spot market, situation where we might get an email from a buyer and that's looking for 5,000 bushels of organic soybeans, then I'll call to a couple of the farmers that I know have soybeans in their bin, okay, and I'll say, okay, I've got a buyer that's looking to buy 5,000 bushels of these. What price would you sell these at? So then I can go back to them and give them an offer, and the farmer will give me a price. Say, okay, give me a week. I'll hold that price, and I'll go back. And so then I'll send a price to the customer. I'll tell the customer they have to let us know within a week. Otherwise, the price is potentially renegotiable.
Mm-hmm.
So that's kind of how that process all works.
It seems I see why both of you are saying storage can be so important, but at the same time, Scott, you gave the example how you don't want to keep, being stored for a year. How do you guys think about how much storage is good to have? Is it always more is better, or how do you size the amount of storage you want for the acres you're growing on?
Scott, I'll start on that one. I feel I have to have enough storage to store all my crop for 1 year. It all goes in the bin, and then it gets delivered at buyer's call.
Yeah, and I would say that's pretty standard. It's not like you have to figure the biggest yields that you've ever had. Work off of maybe a little bit over average to make sure that you have enough air in that bin,
Mm-hmm.
so they're not filled to the very, very peak. But yeah, I mean, when you're working in the organic space, generally speaking, you're not delivering a lot of stuff right off the field.
Mm-hmm.
And so just understanding what your average yields are and what you can expect, and then having storage that's commensurate with that.
Okay. And then, so we've got some people tuning in that are working with organic farmers, and some people tuning in that are, I love this new term I learned, organic curious farmers. Uh, and then we've got people in transition right now. Do y'all have any tips for marketing your rotation through transition where you're not getting that organic premium?
So I can talk a little bit on the soybean side.
Yeah.
On the soybean side, and fantastic. Keep working with these organic curious farmers, by the way. I mean, uh, some of the last data that I saw was, I think soybean acreage was down 8% from last year, and corn was down 6% last year for planted acres. So we're, when prices are low, typically that's what we see, and so we'll need to replenish those acres without a doubt. But in terms of soybeans, I think that I lost my train of thought. Hold on. Say that again. What was the question?
Yeah, no problem. We were talking about organic farmers, organic curious, and transitioning farmers right now, and any tips for marketing transitional acres.
Yeah. So in terms of organic curious farmers and transitioning, when it comes to soybeans, like we work with a lot of transition farmers on the non-GMO side. And so we're able to at least offer a premium for the guys. Just to essentially, we're buying transition beans, but there's not a whole lot of transition premium type markets out there. It's generally just a non-GMO market. When it comes to soybeans, now I've certainly seen guys put it into alfalfa or something like that. There's different plans of attack on how they want to do the transition, but that's what I would say.
And I guess, I not so much on the marketing end, well, maybe a little bit, but people will ask, well, gee, when should I transition? Prices are low now. Organic prices are low. Jeepers, we should have better prices. Now is the time you want to transition, in my opinion, because you want to be certified when this thing turns around. So you can capture a better margin, because you're going to be selling virtually into the conventional market anyway. I realize conventional is down too, but it's no fun to transition when prices are good, and once you get certified, they drop. So I think this is actually an opportunity this time if you want to transition.
Yeah, without a doubt. The perfect cure for high prices is high prices, and the perfect cure for low prices is low prices.
Yep.
I feel like sometimes your advice, Scott, is either way over my head or I'm overthinking it. Scott, you had said, if I recall correctly, you had said you can't treat your soybeans like they have a birthday when we're talking about crop rotation. That one stuck with me. Could you say what you mean by that?
Well, again, it goes back to timing and marketing and understanding, what a good deal is, and not falling in love with your crop that you end up with in August 27th with a bin full of soybeans that you can't sell. So we don't believe that any crop should ever have a birthday, but soybeans for sure should never have a birthday. They don't store nearly as well, and so what I'm saying is make sure you get your crop marketed within the marketing year that it should be marketed in. There's certainly some potential opportunities that we've seen in small grains maybe that might store for multiple years, but generally speaking, an oilseed crop, you need to get that marketed.
Mm-hmm. Okay. I was curious to ask both of you too. We were talking about costs of production. Could you say a word about the interest rate that a farmer might have on their operating loan, and how that might impact how they're thinking about the price they need or the cost of production?
Yeah, I mean, so most operating notes right now are probably 8-9%, and for a long time we've been operating as an ag economy in a low interest rate environment, and there's a lot of, before on your balance sheet you just skip over your interest expense line and it wouldn't even be a big deal. Well, it's a big deal now, especially for some of these new and younger farmers. And again, all goes back to your lender, and making sure you have a really good relationship with your lender, and understanding understanding what that interest expense means and how it correlates into your storage. Because again, everything we're doing is buyer's call, and so it's going to be, you're going to have interest expense when you're working in these environments.
Mm-hmm. Yeah, lenders are really, really key. And it's funny, there's different mindsets there. I know a lot of guys, and I've been there myself, or the goal is to get debt free. And I applaud that. That's never going to happen for me because there always seems to be an opportunity that is worth the interest. And whether it's putting in tile drainage or some other investment of some sort that's going to give you the sustainability as an operation and help you to be there for the next generation, I'm always going to have a loan for something.
So you're saying, Lynn, that, yeah, how did you change your mind from thinking, okay, I want to get debt free to, yeah, no, I want to take out loans and that's going to make me money?
Yeah, I guess I've just seen that that's what it's going to take for me to be successful. I'm going to have to carry a certain level of debt to be able to access some of the opportunities I need to access to be profitable.
Yeah, that's a good way to put it. I'd be curious to get both your perspectives too on any kind of tips for farmers that are transitioning. It seems like, especially now with social media, which is great, it's so easy to see what other people are doing and trade ideas and get inspired. But I talk to a lot of organic curious people or transitioning people who are talking about, organic no-till or narrow row, or, I'm going to try all these different things. And I think some people can get kind of overwhelmed. Yeah, any tips for farmers who are transitioning either kind of agronomically or financially?
I would like to comment to that because I think I've tried almost anything that I think I've tried as many things as anyone through the years. I'll just say it that way. And you learn a lot in the process, obviously, but anytime you change something, there's a cost. It could be an equipment cost. It could be a learning curve cost. It could be you need different storage because you changed to a different crop, or you didn't recognize, again, with learning curve, the impact on rotation that one crop was going to have on another or something. So there's always a cost to making a change. So if you once can get to that point where okay, this is what we're going to do, and this is how we're going to do it, and any changes we're going to make are going to be very subtle, very slight, kind of stick a toe in the water, make sure it's the right change. I think makes a lot of sense. If you're continually getting into new and different crops on and on and on, it's hard to really realize the benefit of it because there's that change cost all the time.
Yeah, you're saying kind of like, don't feel like you need to reinvent the wheel, especially at the beginning. Maybe take a system that's already working, get that working good for you, and then you can change one thing at a time.
Yeah, and I'm glad you brought that up because that jogged my memory on one thing. I think something that's really key is get a mentor. And, great if they're 2 miles down the road, but if they're 1,000 miles away, we've got the internet, we got phones. When you run into a problem, you're sitting on the headland of your field and you're looking at something saying, what do I do with this? You better have somebody you can call who knows.
Yeah. Yeah.
Because you're dealing with some very expensive decisions and you got to know right now. Mentors are invaluable and they're eager to help.
Yeah. Question from Ashley, and feel free, y'all who are listening, feel free to ask the question or comment as you wish. Make the most of having Lynn and Scott at our disposal. Lynn, what kind of in general, of all your time you spend on your farm, how much of that time would you say you spend marketing? And then other part of that question is, just like you were saying, organic farms have more machinery than a conventional farm. What's the comparison of the time and the effort marketing on an organic farm versus marketing on a conventional farm? Again, just if people are thinking about getting into organic, what are the trade-offs?
What do you think, Scott?
I actually think marketing on a conventional farm is more time consuming than an organic farm. and mostly because on an organic farm, yeah, you have to spend some time calling and making phone calls and things like that. But generally speaking, once you have your contracts in place, you're pretty much done marketing. You know what your costs, you know what your contracts are. You know what you've locked in for your pricing. Whereas on a conventional farm, you're subject to the market every single day, every single minute, and the Chicago Board of Trade is constantly moving, and so you're always watching that and try every single day trying to figure out when you want to make marketing decisions. And so overall, obviously once your crop is sold, it's sold, but a lot of times I've seen it. We still have tomorrow on our conventional contracts. Tomorrow is our last day for our 2023 crop farmers to price their crop. And we still have a bunch of farmers that have crops still to sell, and just because they haven't been able to pull the trigger over the last year and a half that they've had a contract with us. So it seems like there a lot of conventional farmers are always they always feel like they're always trying to get the highest price, right? And so they never think they're at the highest price, and so it kind of paralyzes them sometimes.
Yeah, and just jogged something else in my memory. 30 years ago, when I switched to organic, I sent my DTN back.
Yep.
At least I find I really don't need it. Wouldn't even use it, actually. And so people talk about the markets, at the elevator and so on. I really don't know. I don't know what wheat is. I don't know what corn is. I have no idea because it doesn't matter. We're not in that world.
It's interesting, if I'm hearing you right, or correct me, it sounds like on the one hand, marketing organic grain is maybe harder because you have to have that price discovery. It's not just published. You got to call people, build those relationships, whereas your conventional neighbor just sells it at the elevator. But on the other hand, the conventional farmer, what that price is and it's changing all the time, and you got to stay up at night kind of following it. Is that the trade-off you're saying?
Yep.
I would say.
Exactly.
Okay. Yeah. Let's see. Any other questions from the audience? Feel free to type in the chat, and we'll start winding up here in a few minutes. Oh, I wanted to ask both of y'all, for my work with oats, I do a lot of work trying to train organic advisors so that we can give better advice to organic farmers. Like you're saying, Lynn, when you're at the headland there and you got a decision to make, you want someone that knows what they're doing. I was curious to ask both of you something like, what do you wish that organic advisors knew, given that a lot of people are listening in on this call? But yeah, what do you think are helpful skills or knowledge or connections for organic advisors to have to make them useful to organic farmers?
Scott, you got anything on that?
To me, the most successful organic farmers that I've seen typically have a very good handle on their soil health. And so soil health is a huge proponent for the crop advisors from a knowledge standpoint, I think. And the other one is the different options in weed control, whether it's, planting into rye, whether it's using a flame weeder, whether it's using a tine weeder, whether it's cultivating, whatever it might be, but understanding the weeds that are out there and the germination time frames of when those weeds typically germinate, to help the farmer in their decisions on which type of weed control would work best at this point, and on which type of ground, right? So.
Mm-hmm. Yeah, I have nothing to add.
Okay. I'll pause another moment for any final questions. And Amanda, feel free to interrupt me if I'm not seeing them. But with that, we'll kind of wind down. And first of all, let me thank Lynn and Scott. Thank you so much for taking the time to work with me on this and sharing your experience with all of us on this Organic Advisor Call Series. Appreciate it.
Looks like you have a hand up.
Oh, great. Hand. Okay, whoever's. Okay. They're clapping. Appreciate the clap, Ashley. Thank you. Gotcha. We'll take it. Another thing. An event coming up is the Midwest Mechanical Weed Control Field Day. And so If you want to meet with other transitioning farmers or organic grain farmers, or to Scott's point, to learn more about weed control, consider attending. We're at Purdue University, Lafayette, Indiana, September 11th, Midwest Mechanical Weed Control Field Day. Before you leave your desk, if you would take just a moment to fill out our evaluation, it takes approximately 33 seconds, and your opinion will help us improve these calls. So we'll put that link in the chat now. And again, if you'd take all 30 seconds and just give us your honest opinion, suggestions for future topics, that would be great. And lastly, save the date for our next and final for this series, Organic Advisor Call, which is this coming Tuesday, September 3rd, from 12 to 1 Central Time, where we'll be discussing planning for transition with larger acreages with agronomist Nick Podol of the Rodale Institute. So Lynn and Scott, thank you again, and I hope you can all join us next Tuesday. And until then, happy summer.
Thank you.
Thank you.